So what caused the turnaround?
Well, it appears regulatory concerns and second quarter outlook caused investors to really, reverse sentiment during the call. Uber said that worker reclassification in the UK cost it $600 million. That actually resulted in an 11% decline in revenue. Bonuses and incentives will now be used, Uber says, to get drivers back on the road, and that's going to impact second quarter earnings. Investors clearly didn't like hearing that. But as for first quarter earnings highlights, it was largely very good news. Uber saw record demand. There was strong growth of 24% in gross bookings, driven largely by the delivery business. The total value of customer spending on Uber reached $19.5 billion. That's an all-time high, exceeding estimates. Delivery bookings were up 166% from a year ago. But the stock, which initially spiked on all that news, did decline as we got into the conference call. One of the concerns, of course, is that it looks like getting those incentives for drivers back on the road could take as much as 20% out of each fare in the second quarter. The ride-hailing and delivery company did narrow its adjusted loss in the first quarter and said it plans to reach profitability by year end, but that did not appear to reverse the after-hours decline. Again, largely good news, but a lot of investors focusing on what's ahead this summer. Heidi?
So what were some of the other highlights of the conference call for you?
Well, we should point out that regulatory issues were a dominant topic. The executives did downplay news earlier in the day that the Biden White House was reversing a Trump gig worker rule. They said that had been largely expected and was not going to be impactful. They did give us details on a landmark ruling in the UK where the company has now had to agree to government-mandated benefits to drivers. That resulted in that $600 million expenditure. Without that cost, Uber would have reported revenue growth of 8%. They put a lot of emphasis on the delivery service. Delivery revenue rose another 28% from the prior quarter. They also pointed out they are expanding the delivery service and plan to grow the grocery segment, which they believe has the potential to be a lot bigger market than food delivery. And on the regulatory front, it looks like food delivery is also an issue, specifically the fees delivery apps charge to restaurants. There are some legal issues on that. One analyst pointed out pre-pandemic, there was no oversight on these kind of fees. Lastly, there was a lot of emphasis from both the CEO and CFO on getting to profitability. Uber says it will do what needs to be done on that front, and they've cut a lot of costs.